Eric Mother at Mother.com with world market analysis for the weekend of July 23rd and July 24th, 2016. Take a look at markets here. We see pretty much a down day for the close of Friday's session as far as Asia is concerned. If we take a look at the close of European markets, we can see that European markets pretty much close, let's say, unchanged or slightly to the upside. And right now, with about 2 hours to go, we can see that the Americas, Brazil is up slightly, the Canadian market is also up slightly, and this mirrors the action in the US as of Friday's session before the market closed. 2 hours to go, pretty much, let's call it slightly up day for the major averages. Let's take a look at those world charts. Let's begin by taking a look at the Australian market on the weekly chart, so 2-year weekly, and we see that we are trading above the previous 2016 weekly closing high. So that breakout continues to play out. So that's a market that might be looking to go higher. That's a good breakout as long as the market is trading above 5469.70, which is this close here. This market continues to act well. Now the question here we've been asking is whether the market is actually breaking out above this topside RSI resistance line, or if it is coming back to test the prior break, and that break, so the break coming off the highs during this break here is what is being tested. As you can see, the market is pretty much close to that level. So if bulls are gonna continue pushing the market higher, they need to keep the RSI above those two resistance lines, and so you need to see the RSI trading above that here to confirm a market with momentum. Otherwise, if we roll over back below those two lines, then this is going to be another area where we can expect a pullback. But by the end of the trading week here, there's signs that the market could actually, if it wants to, now that it is trading above this topside resistance line on the weekly chart, anything above this, and the market might have a chance of moving higher. Let's take a look at the Chinese market, and I'm going to draw a simple line going back to the lows here. Should be something like that, and you can see that the market was using this for bounce territory here, bounce territory here, and once we broke through that here, the market's been using this for a reason to find resistance and move lower. As you can see here, that we did hit this level and the market pulled back, and now we are back to challenge the same level. So we can see from a price perspective, the market needs to clear this line if it is to move higher. Otherwise, if we see rejection around this level here, then the next swing trade is going to be lower. So we can also see that the market is generally coming back to test a level on the chart that has been a problem. So here we have resistance at the RSI 50 level for the highs here and here. We have RSI rejection during this period for both highs here and here on a weekly closing basis. And now, depending on what happens, if we do confirm that we've gone above the 50 level on the weekly chart and back below it, so if the market does something like this with uniform activity back below 50, then that's when we are going to see the confirmation that the market is poised to go lower. So here the market needs to decide whether it can move above this level here in price, or if this is going to be the resistance level. And also on the RSI, somewhere around here is either resistance or the market clears that resistance and starts moving higher. If we take a look at the Nikkei from a daily chart, we can see that it is back to resistance levels, as you can see from the previous break, and that break brought the market off the highs of late December, and so we draw a line from there. And you can see that the market's been finding it difficult to move above this line, with resistance here for those highs, resistance here for the highs there, and now coming back to test this level. So if the market cannot move above that level, we can start looking for a pullback. If you take a look at the weekly, you can see that this is consistent with the market finding resistance here around the 50 RSI level in late 2015 for the highs there, resistance around the 50 level on the weekly chart. On the RSI led to price resistance, resistance here again left to these highs, and now we are back in this general area. So if the market is to move higher, it needs to clear that 50 RSI level as the first layer of resistance. Otherwise, we might be looking at a pullback. Now, that's the weekly and the daily. If you take a look at the long-term monthly chart, you can see that it doesn't look that bad, because the market pretty much, and this chart goes back to 1990. And what we see is, ever since the market blasted above this range, let's call it sometime in late 2012, so this RSI movement corresponded with this price movement, and of course markets did move higher over a period of years, and so this is now where we could find support. If we draw a line from that level, we see that for now the market is coming back. Over the last couple of months, we've hit this level twice with a double bottom support. So what this suggests is that month to month, the Japanese market, or the Nikkei, still looks good until such a time as it can break below this support line. The market month to month looks good. So in other words, we might be looking at a scenario where markets pull back day to day, but generally speaking, in the coming months, this market is already set to move higher. If we take a look at the monthly chart for the Nifty, we can see that now it is very close to potentially moving above 2015's monthly closing high. So as we inch even closer to that, the level to watch here for a potential breakout is any movement above 8844.60. So this is the previous all-time, or the current all-time monthly closing high here, going back to February 2015. Looks like, keep in mind that the SPX and the Dow Jones Industrials have already moved to fresh monthly high levels, so it is not out of question that the Indian market might do the same thing. So this looks like a logical situation where the market could actually try and test the highs of 2015 on a monthly closing basis. Keep in mind, this is consistent with the fact that we saw the RSI here move below 50 and back above 50 with uniform activity, which generally does suggest that we might see the market make a new improvement in price high. So I think here it might make sense that this might actually be a level that the market might break out. Now, a breakout above that level, 8844.60, any breakout above that level is going to be very constructive and bullish sign of intent for market. Now, of course, that is the bullish argument. Let's take a look at some argument here that the market is actually coming back to a level where it might stall. Go back to the 3-year weekly chart, and what we do here is we just draw a simple line connecting the previous trend line, something like that. You see that once we broke through this level here on the RSI, this corresponded with the market coming off the highs here on a weekly basis, and what we've done here is come back, and now we are testing that level. You can see that the market here is starting to decelerate. In other words, the price acceleration is slowing down. It might be because the market is coming back to test this level. If this is proven to be resistance level on a week-to-week basis, then this chart is suggesting that week-to-week, the next swing trade is going to be down. Now, this is also confirmed by taking a look at the bank Nifty, so the banking sector in the Indian market. Similar type action. If you take a 3-year weekly chart, take a look at this trend line break. Trend line break in March 2015 brought the market off this level here. We have never been back to that level. If you draw a line from that break, you can see that right now the market seems to be already responding to that level, and as long as the market is responding to that level and showing resistance, then any confirmation of resistance on that line here, any confirmation that the market eventually moves below the red line, might be suggesting that the next swing trade is down. So clearly the market has a decision to make here. Does it have enough energy to clear that resistance? If it can trade above that resistance level, then that's going to be bullish. Otherwise, failure to hold above that red line might suggest that the market moves lower here on the RSI, and that suggesting that the next swing trade for market here is going to be down. And if you consider how the market closed for the Bank Nifty this past week, the signs are that the market has come back to this level and already finding it challenging. So you can see already showing resistance, might suggest that the pullback is already starting to play out. This is not the only market showing weekly resistance potential. Take a look at the French market. The French CAC 40 is coming back to test the top side of its weekly RSI. So until it can move above this line of resistance, just like there was resistance on this line for these highs, the market has worked its way back to test that level. So market bulls would like the market to clear that line. Otherwise, failure to clear that very well defined line of resistance on the RSI might suggest that for now the weekly chart is suggesting the next swing trade for this market, which is the French market, is also lower. If you take at the German DAX, so the German market here, and go and figure out where the recent break, so this break in the RSI, a level we've been watching the last couple of months, this break in the RSI brought the market off those highs. We haven't been back there, and if you draw a line from there just slightly above the RSI 50 level on the weekly, you can see that every time we show resistance with uniform activity, the market makes a short-term high, rejection with uniform activity here, short-term high, rejection with uniform activity, short-term high, and now we are coming back to test that level. Failure to move above that red line might also suggest that the next swing trade is lower. At the same time, if the market can move above that red line, so movement above the red line here might suggest that the next swing trade might actually be higher. So depending on which way the market wants to go, a breakout is what bulls want to see. Otherwise, failure to hold above that red line might be a problem, again suggesting that we should be expecting a pullback as far as the European markets are concerned. If we take a look at the long-term monthly chart for the German market, so the DAX here confirms what we know about market behavior. You can see that during the periods when the RSI is above 50 on the monthly chart, you tend to have good periods in the market. As you can see here, there was another good period here between 04 and 07. Again, the RSI was generally above 50. There was a short period here, which is this period here when the markets were trending higher, and here from 2012 to about late 2000 and let's call it about 2015, the market was trending higher here. So we can see that the challenge for the market on a long-term monthly basis is the market needs to stay above RSI 50 if this market is to see higher prices. Right now trading at 51, we have to wait and see, but anything above 50 gives this market a chance of moving higher. So really what we can see here is if we combine the weekly chart and the monthly chart, we can see that week to week there is a chance that the markets might actually move lower, but month to month for now, most markets are still pointing to the upside. And as long as the monthly chart is the bigger time frame, we give more weight to the bigger time frame, suggesting that month to month, even with pullbacks day to day and week to week, that markets could actually be trading higher in the coming months. If we take a look at the Canadian market on the 2-year weekly chart, we can see that as long as the stock is breaking out above the recent weekly closing high at 14,226.78, let's give the market the benefit of the doubt as long as the weekly price breakout is taking place. Now you can see here the weekly continue to look okay, but take a look at the hourly chart for the Canadian market. We can see for now we've been seeing slight price highs on the hourly chart here, but the RSI has generally been making lower lows. So this could be a problem because we are seeing an improvement in price, but the RSI is not following through. So this negative divergence at the end of the day here in the coming days or two might suggest that don't be surprised to see the market stage some type of a pullback based on this negative divergence. If you take a look at the EWZ, you'll notice that this is also another market showing an improvement in price highs recently on the hourly with a declining RSI formation here, suggesting that also here this negative divergence eventually does lead to a pullback. Now what is encouraging here for market bulls as far as the Brazilian market is concerned is right now we continue seeing that the market continues to trade after moving above this recent 2016 weekly closing high. The level to watch there was 29.29, and here I'm using the EWZ, the ETF that tracks the Brazilian market in the US. So right now looks good. And also keep in mind that on the weekly RSI, we are looking at the market here trading above 69.1 on the weekly. This happens to be the sweet spot when instruments are trading above 69.1 on the weekly, daily, or monthly charts. Even on the hourly, they tend to pick up some type of momentum and go into another type of gear. So here the market looks good as long as it is breaking out and holding these levels here, with a hint that there's a pullback in store based on that hourly chart. Now if you take a look at a long-term monthly chart picture, and here we have all data for the EWZ, I think month to month we are running into a problem that could be into a trouble spot for the market here, because if you take the line connecting RSI highs on a month to month basis, we've come back generally to test this level. And if the market cannot move above this level here on a month to month basis, you can expect around here for there to be a pullback. So this is gonna play out very slowly over months, but as long as we are unable to move above this line, one can expect that this is where it stalls. So yes, week to week looks good. Short term on the hourly looks a little bit suspect. So right now we have momentum with a chance of a pullback and probably resistance in the coming months. You can also draw the resistance coming off the highs here of 2010, 2009, a simple line like that, and you can see that this is clearly a level that the market needs to move above. Otherwise, month to month, after a nice recovery in 2000 and off 2000, early 2016 lows, we might be seeing a market that is coming back to test this level and stall month to month. So after a nice run, it won't surprise me that over time, the next major swing trade in this market is going to be lower. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. EACS. Whoa!